Central Bank Digital Currency, or CBDC. It's all the rage these days. 9 countries are already using it, and over 90 more are actively developing the concept, including China, Russia, India, and the United States. So what is CBDC, and what consequences could it have on your finances? Let's break it down. January 2022. The Federal Reserve released a report examining the potential for CBDC in the United States. In March of 2022, President Biden issued an executive order instructing the U.S. government to explore the possibility of instituting a CBDC. So at its core, a CBDC is, well, money. But instead of papers and coins, a central bank digital currency is, as the name would suggest, completely digital. Just a bunch of ones and zeros. Now you may be thinking, how does this change anything? After all, 81% of US transactions in 2020 were done without cash. Between credit cards, debit cards, digital bank transfers, services like Venmo, isn't our currency effectively digitized already? Well, no. In our current system, when you use a card or money transfer service, you're instructing banks and other institutions to make that exchange on the back end, which takes time, often several days. The point is, those digitized assets stand in for physical money that either the bank or some other third party is responsible for. The digital count is their own liability because the United States only creates physical money. A CBDC would change all of that. Under a CBDC program, the government actually issues digital money, not anchored to anything physical. And unlike cryptocurrencies like Bitcoin that are specifically designed to be decentralized, a CBDC is centrally controlled by the government, officially recognized legal tender. There are certainly some benefits to this. Rather than taking days behind the scenes, digital transactions would take place in an instant. Cutting out the middlemen would also make many services cheaper, and digital transactions would become much more accessible to those with lower financial means. But what might be the negatives? Well, let's not forget that it would be the government issuing and controlling this digital currency, which would effectively create one of the largest government surveillance tools in the country. Every transaction you make would be tracked. And yes, of course, credit cards keep records of your transactions, banks keep records, and you're probably watching this on your own little surveillance tracker as well. But those are private entities. Through a CBDC, your transactions would be tracked directly by the government. If they want to check in on you, no warrant or middleman required. But beyond the surveillance concerns, a CBDC raises some serious questions about how the government could impact your finances if you don't meet their definition of an upstanding citizen. We need look no further than our neighbors in Canada. In February of 2022, when the Canadian capital city of Ottawa was filled with truckers protesting COVID mandates, Prime Minister Justin Trudeau used emergency powers to freeze the bank accounts of the protesters. Now, he had to use the power of his government to coerce the private banks to comply with his demands. How much easier would it be if the government directly controlled the digital flow of money? It would be a tyrant's dream. Speaking of tyrants, as China actively develops a CBDC of their own, their intent is to tie it to their totalitarian social credit system. So if you aren't sufficiently loyal or subservient to the Chinese government, well, that will be reflected in how your finances are treated. But the United States government would never do that, right? Right. Other suggestions have included limiting the amount of money someone can possess, or even setting expirations on money so you are forced to spend it within a certain amount of time. Now, none of these are necessarily in the plans right now for an American CBDC, but the question you have to ask yourself is, just how much do you trust the government with control over your money?